All right, good evening, everyone, and welcome to Friday Night Forex and Chill. Tonight is Friday, October the 18th. It's a little after 10 p.m., and tonight we have a special guest, Mr. Ryan LaBar. He's going to be teaching us about his Renko strategy, and I want to introduce first Gigi. She's our main host. She's the creator of Friday Night Forex and Chill, and I'm gonna leave it to her, and then she can introduce Ryan.
All right, guys, as you can see from my screen, we do have Ryan LaBar on tonight. Some of you know that I love trading market structure and I love Renkos, and that's how I found him. A lot of people on the team, we were looking at Renkos over here on TradingView, but not everybody can afford the TradingView platform, so I went looking for another way. And so I started searching YouTube. So here's Ryan's YouTube channel. You can see last week he had 1,250 pip week by using what he's going to teach us tonight. So make sure you go over, like, and subscribe to ZenFX Trading. This is his website for his service. So I am going to read you his bio because he has a really great bio and I don't want to mess anything up. I very seldom read anything, but he's got a lot of good information, so I'm going to read it real quick and then hand it over to him. Ryan LaBar is the CEO, lead trader, mentor, and founder of ZenFX and the ZenForex trading community. He is a full-time trader for the past 5 years. He created ZenFX to provide high-quality training and free resources to those striving to become full-time, consistent, and profitable traders. He regularly offers free education, so go over and subscribe to his YouTube channel. And he offers live trade rooms for anyone interested in learning and specializes in mentorship on using his Renko charts. He teaches advanced concepts of scalping, intraday trading, and using simple price action. He's the creator of the surgical scalping and full circle scalping methods, as well as being one of the top authorities on trading with the Renkos. Having also created the RTM and levels trading methods, as well as the extremely popular golden level strategy, which I do have and use. Ryan has taught hundreds of students in the last 5 years to become consistent traders. He can be found trading live right alongside his students almost every New York session. Ryan's dedication to honesty and integrity in the Forex business is unmatched. And so you guys, you know, I'm very picky about who I bring out here. So I did go check out his system. I like his system. I use his system. I've been profitable with his system. So again, go over and subscribe. That's his YouTube. This is his business page, and now I'm going to turn it over to you, Ryan, and when you're ready, I will stop sharing and let you share your screen.
Absolutely. Thanks, Gigi. I really appreciate that introduction, and thanks for having me on tonight. I really appreciate it. So let's talk about the Renkos. I'm really happy to be able to come here and show you guys something new tonight. What Gigi has told me is that you guys have been working a lot on market structure, you know, and a little bit about my background. You know, I've been trading full time for over 5 years, and when I first got started, you know, I got started with Japanese candlesticks. I got started using the market maker method, which I found overly complex. I don't know if anyone else has had that same experience, but I hear that from a lot of people. It's very, you know, sometimes too much is, you know, too much. And when you have too many rules, it clouds up your trading. So then we moved on. I moved on to just basic price action and technical analysis. So I do have a very good foundation in price action and technical analysis. And then eventually I stumbled onto Renkos, and that's what I want to show you guys tonight. Now, this is something that I think you can add to what you're already doing. It's not like something completely new where you'll have to disregard everything that you've already learned. And what we're going to do tonight is I'm going to, you know, I do these webinars every week for my students. You know, we jump on, and the way that I usually run it is, you know, we're going to run through, I'm going to show you a theory, and then we're going to look at the actual charts. I'm going to show you some setups on actual charts, and I'm even going to do something that I've never done before because I really appreciate Gigi having me on tonight. I'm going to teach you guys a very simple strategy that I teach all of my students on using Renkos that you can go out and you can apply starting next week as soon as the market's open. It's very simple. You don't need any special indicators to do it. And it's the strategy that actually got me started in Renkos. And it's not an unknown strategy. It's been out there for a while, but that's what I want to teach you guys tonight. So at least you'll come away with something you can use as soon as the market's open starting next week. So I'll go through the presentation, and at any time, if you guys have any questions about anything, just put them in the chat, because I know everybody's muted. I will check the chat from time to time, and I'll try and make sure I get every question answered. If not right away, then it'll be, and let me share my screen real quick. And then it'll be, we'll catch up at the very end. So let's see here. All right, yeah, let me go ahead and share my screen with you guys. Okay. All right. Now, can everybody just in the chat really quick, let me know, can you see my screen? Can everybody see the PowerPoint presentation?
I can see it, Ryan. It looks good.
Perfect. Okay. Well, let's not stand on ceremony. Let's go ahead and jump right in. So I want to go over the basics of what Renkos are. I want you to just know the difference between what a Renko and a candle is. I'm also going to talk about Height-Kanashi candles, but just get those basics down, and then we'll jump in the actual charts, and I'll show you guys the strategy that I'm talking about. And then we'll talk a little bit about just what you can do with Renkos, with what you're doing already with market, with price action and market structure. And then, of course, if you guys have any questions, I'll stick around and answer as many questions as you guys have for as long as it takes. Not a problem. So let's go ahead and jump in. So when we talk about traditional candlesticks, we measure in time, right? Every candle is an increment of time. It's showing us like the M15 chart. Every candle is 15 minutes. That's how we are used to seeing price happen. Okay. So, and let me put this out there in the very beginning. We're going to be going over some advanced topics in Forex tonight. I'm going to try and start from the very beginning, but we're going to move very quickly through a lot of these concepts. So if you're very new to Forex, you might get a little bit lost along the way. Don't worry. Like I said, this is being recorded. You can watch it as many times as you like. But you that have been trading for a while, you should be able to keep up with these concepts that I'm throwing out there. They should be pretty well known to you already. Right? So when we look at Renkos, though, okay, we're looking at the measurement of price. Each brick, so instead of a candle, now we're working with bricks. Each brick is a measurement of price. Each one is exactly a set number. And you set that number, of course, it's just like choosing a time frame in a chart. You say, instead of choosing the 15-minute chart, you say, I want to see like 6 bricks or 12 bricks, or, you know, so on and so forth. And you can set the size to whatever you want, but they will always be exactly the same. Okay. So that's the difference, is that candles are measured in time, Renkos are measured in price, right? Everybody with me so far? So that whole thing right there, 6, 6, and 6, that's an 18 pip range, okay? So the benefit of that is that instead of having to deal with this type of movement like we see with candles a lot, where it's just printing because time is passing, but nothing is really happening with price. So instead of seeing that, we can condense all that down into a single Renko brick, of course, you know, depending on the size of the brick. But you can see how that one, okay, encompasses all of this consolidation. And there's a lot of anxiety when you're trading that's going to be pent up in that non-movement. Okay, you're wanting price to do just something, anything, right? So instead of seeing that, what Renkos do, and what they do the best, okay, is they show you the movement in the market very clearly, and they take a lot of this, what we call noise, out of the market. So they take that noise of inconsequential price movement out and just show you what you need to see, whether or not price has moved in enough of a way to where it's going to make a difference in your trade. Okay, so does that make sense to everybody? So instead of dealing with that, we're dealing with a single brick, you know, depending on the chart that we're looking at. Okay, now what we use with my strategy is a variation on Renko bricks called the mean Renko. Okay, it doesn't mean that they're ill-tempered. Okay, they're not ill-tempered sea bass. What they are, it just means the middle or the median. Okay, so mean Renkos, what they do is they start already half filled. Okay, and they start at the very middle of the next brick. So when the next brick starts, it starts already half filled in. but that means that it covers twice the range. So it has to be able to go up. Say if you're looking at a 6 pip chart, it has to go up 6 and down 6. It has to be able to go in both directions to print that out. So those are going to be twice the size, but the movement, as you'll see, is much, much smoother. Okay, so that's all. I mean, you guys can look at that. That's just more, you know, explaining it all, bringing it down mathematically. But what the point is, though, is that when a reversal brick prints, it's going to change color. That's how we know that a new trend is at least beginning to start. But that's also because it starts in the middle. That also has to finish in the middle as well. Okay, so it has this entire range to print. That's why it's twice the size. So when we look at like a 60-point chart, and I'll show you guys this in a second, which should be 6 pips for every brick, right? It has to go 6 up and 6 down, so it's actually 12 pips, and I'll show you guys that. But the point is that by starting in the middle, it makes them look much, much smoother. That's all you need to remember from that, is that it's just going to make the trend look much smoother when we look at an actual chart. Okay, so now some people do use these types of strategies with a very similar type of a candle, and that's called Fibonacci candle. And I'm sure some of you have probably seen them. Some of you probably traded with them. They get confused with Renkos a lot, but the big difference is that where Renkos are a set representation of real-time price, you know, Fibonacci candles are an average. Okay, they're calculated out using the open, high, low, and close of the actual candle that's underneath it, but it doesn't represent the actual price at that time. It represents that formula. So you could say, you know, I want to take a trade when, you know, when price is up here, but when price is up here, that's not the actual price that you'd be getting it for because of how these are calculated out. And of course, if you want some light reading to go to sleep to, this is how Fibonacci's are calculated out, okay? But they are different from Renkos, and that's just the main difference, okay? They're based off of candles. As far as the calculation, Renkos are just simple price movement. Now, the other thing that you need to know is the difference between an online and an offline chart, okay? And I promise we'll get to the charts in just a second. Just bear with me as I just give you this very basic knowledge, okay? Trust me, it's important. Now, an online chart, this is where you're getting your data feed from, your broker. This is where the actual data feed is producing candlesticks in real time, okay? Now, an offline chart is linked to this real-time chart, and it's giving you a Renko display instead of the candlestick display. So some people get confused when we pull up Renko charts and they say offline. That only reason it's called an offline is because it's using the data feed from its parent chart, which is the online candlestick chart. And I'll show you that when we open them up. And when you see it, it'll make much more sense. But the point is you have to have both of these open for these to be printing. But even though it says offline, it is still getting the exact same data in exact same real time as your candlestick charts. Okay, let's go ahead and take a look at some of the charts. Now, the Renkos that I'm going to be using in this demonstration, I get them from this company. I'm not affiliated with this company. I don't have anything to do with them. But they do give a very good product. We use them pretty much exclusively because they'll give you a lifetime key for MT4 for multiple machines for only $45. It's this one here. It's the Mean Renko. So if you guys are interested, you get a free 14-day trial. I recommend downloading them, playing with them. Like I said, I'm going to show you some stuff that you can use next week, you know, and maybe take it out for a test drive and see how you do. Just download this Mean Renko. Also download this Omni remote control, and it's free. And I'm going to show you how we're going to be using that as well. So let's go ahead and dive right into the charts. Yes, right, the good stuff. Okay. So what we're going to do is like I said, I'm going to show you one of the most very basic strategies that I teach the students. This is the first one that they learn. And this was the kind of the foundation of our course for a while, but we have evolved even more strategies since then. Right now, this one, the template you see right here is a strategy called our levels strategy, and this is CAD Swiss franc. This is a trade that we took on Thursday that I took with the students in our New York trading room. And as you can see, this one's in some very, very good profit right now, just based off of simple ideas of support and resistance, okay, which you guys should be very familiar with using market structure. You'll also see here that, I mean, this was a very classic, even if you're just using market structure, very just simple double top formation and a drop. So nice trade happening on there. Let's see. So let's take a look at a chart. So what you'll do is you'll open up just a chart, a regular candlestick chart. Here we have the 15-minute on Euro Australian dollar. Okay. And as you can see down here in the bottom, this is our mean Renko indicator. Let me actually show you on the list. Okay. So what you do is you just like any other indicator. And I mean, if you're unfamiliar with MT4, like you're really unfamiliar with MT4, I have a boot camp series on my YouTube channel. Just like it's 4 videos. It'll show you how to use MT4 like a pro, like if you've never even used it before in your life. But you know, if you have used it for a day or two, you know what we're doing is we're going our indicators folder and we're pasting that indicator, the mean Renko and the Omni remote file there. Then they're going to show up, as you can see, in our indicators, right? You might have to, you know, hit refresh. Boop. But I've already got them there. So what we do, all you have to do is just, this is the file that they'll send you from OVO. Just grab this mean Renko bar, boop, and then drop it onto a chart. Okay, I already have it on mine, right? But the one piece of advice I can give you is change this to 60, and then it'll give you like a, you know, a trial of this for a while, right? Then you'll have this bar down here. And then to open up a Renko chart, here's where we were talking about online versus offline. This is our online chart. And then down here, I'm going to hit this M61 button, and it's going to open up now this offline chart. Okay, and it's using just my default template. The easiest way to do that, if you want a specific template to come up each time with an offline chart, you just save your template as offline. Okay, just a little quick cheat thing for MT4, but let's take a look at that strategy. So what we want to do here is I'm going to delete all of these indicators. We're just going to start from scratch. Okay, don't need any of these. Yeah, I think that's good. And we'll leave, this is the 200 exponential moving average. Okay, if you don't use the 200 exponential, I highly recommend that no matter what system you're using, that you use it. It's a very good indicator of trend, and it's also highly respected by price, very, you know, more often than not. And we use it in our Renko trading a lot, but you know, for any type of trading, I highly recommend adding the 200 to your arsenal. Now, what we're going to be doing is we're going to be putting 3 very basic indicators on this chart, and then just trading with those 3 indicators. And they are all just moving averages, okay? And so what we're going to be doing is a little bit of, it's kind of a moving average crossover strategy. And I know those are slightly played out, but we put a little bit of a twist on it. And for those of you that have ever seen any of my surgical scalping videos, very, very similar to that. So we're looking for basically just a retracement and a rejection, and then we're going to look for an entry at that time. Like I said, this is not my strategy. This strategy has been out in the internet for quite a while. I teach it because it's very effective and it's very easy for students to get their mind around as like the very first strategy. But this is the only one that is not exclusive to what we teach. The other strategies that I teach are RTM levels, all that. That is our own strategies that we've developed in the course. So for the EMAs, first one we're going to do is 12 exponential, add to close, make that just some type of green, doesn't matter, nice and skinny. Okay, next one we're going to add, we're going to insert indicator moving average. We're going to change that to 24 exponential to close. Give it something like yellow or gold, add that one on. Last, we're going to do one last moving average. This one's going to be our big mover. This is going to be our 36 exponential. Nice red, make it a little bit thicker because we want to keep an eye on this one, and then we'll hit OK. So here we have our 3 exponential moving averages. We've got the 12, which is the green, the 24, which is the gold or yellow, and the 36, which is the red, kind of like a, kind of like a stoplight, right? So we have those, we've got our 200, and now we're going to just scroll back a little bit. We're going to look for some just random specific setups, but we're looking for something very, very specific. So the first thing that we want is, of course, with any EMA crossover strategy, is you want to look for that crossover. Okay, and the one that we're looking for is the 12 and the 36. So we want that green to cross over the red. Okay, very, very straightforward, very simple. We see that here. Yes. Now, we don't enter on EMA crossover because it's too aggressive for trading to enter into a crossover on just the EMA crossing. They can always cross, they can always uncross. It's not any type of a stable signal for having just EMA crosses, but it lets us know that there's a new trend that's starting to emerge, and that's what we want, is we want to get in at the very beginning of that trend. Now, the second thing that we want to look for is we want to look for it to get rejected and have some type of a retracement. Okay, this is very similar to if you've ever traded ABCD patterns, if you're familiar with harmonics or Fibonacci, if you know anything about impulse legs and retracements, anything at all like that, that's exactly what we're doing. We're just doing very simple, basic foundational trading. And so what we're looking for is a big move. And by big, I just mean a push in a general direction. It can even be, maybe 3 or 4 bricks, but it just has to be a good push in a direction, which is what we call our impulse leg, or our 1 to 2. 1 to 2. Or if you're using an ABCD strategy, this is our A to B leg. Okay. Now we get a rejection, and here you can see, look at that. Beautiful. That's right there on the 200. This is why we use the 200 as a guide, because it gets reacted to so often as dynamic support and resistance. And it's not that it's going to hold price back forever, but when price does finally break through, it usually ends up breaking through with a fairly good amount of momentum. So we want to take trades on both the rejection and the breakthrough of the 200. Here we see we have that rejection, and then that's what's going to give us our second part of the trade, which is our B to C leg, or our retracement. Now, we have a tool in MT4 which measures retracements. Of course, this tool is available in really all trading platforms, and that's the Fibonacci retracement tool. Now, if you've not been using the Fibonacci tool in your trading, I highly recommend that you become familiar with this tool. For those of you that do use it, you know that it's one of the just main tools that all traders should be using, just to have in their arsenal or in their tool bag. And for what we do, we use it very exclusively. So we see that rejection, and let's measure that out. We go swing high, right? This is our swing high. That's our pivot to pivot. So we go swing high down to swing low right there. And what we're looking for are two things. We want to see price getting held back here at this 36, like it's getting held back right there beautifully. And then we also want to see it hit a major level. And the two levels that we use the most are the 50 and the 61.8. Sometimes we use lesser levels like the 38 or the 78, but the 50 and the 61.8 in any trading method or system are butter. Those are your golden levels. So always keep an eye out for those. And when we get that, as soon as we get that first reversal brick, which here is that blue brick you see right there, that's that first rejection. We would enter in there, and then, you can manage the trade in any number of ways from that point. But you see, the entry itself was extremely simple to spot and very obvious. Now, I know some of you that might be just starting out would say, that seems maybe not that easy. I mean, it's kind of complicated, but it's really not. You know, I'm breaking it down in a lot of, you know, detail, but when you really look at it, all we're looking for is for a rejection here at the 36 EMA, yeah, and for it to retrace up to one of these two levels. That's all. Very, very easy to check that at any time. So once we get that, we enter, we can use a trailing stop, and like I said, we can manage it going all the way down, but at least we take care of one of the most difficult parts of trading, and that's finding that entry and pulling the trigger. So one of the reasons why we developed this system, and one of the reasons why I gravitated towards this type of trading, was when my old mentor showed me this and showed me Renko's, you know, good, I think it's been 3 years now. It was a real aha moment for me, because that was what I was struggling with the most at the time, was actually finding an entry. And whenever I would get in, it was either too early, too late, you know, or I was going the wrong way altogether. And because of that, I started to suffer a lot from analysis paralysis. I think a lot of you can relate to that. And it just very gun shy when it came to pulling the trigger. And I almost regretted putting on positions as soon as I entered them, because that's how little confidence I had in what I was doing. I was very just doing what other people were doing and just kind of trying to be robotic about it. And I saw someone doing this, so I did that. But for some reason, it didn't work for me. You know, I saw someone else doing this, and I tried that, but it didn't work for me. And one of the biggest things I can tell you guys tonight as traders, you know, I'm going to show you this strategy. We're going to go more in depth into it. But as a trader, it's really not the strategy, and it's not your entry, and it's not any of that stuff that is the most important when it comes to trading. What is the most important is that you find something that makes sense to you, right? That when you see it, it's like, you know, some people can solve a Rubik's Cube. Some people can solve a puzzle, you know, like a 1,000-piece puzzle. Some people can solve all, you know, different types of things. But because that particular puzzle, like, it clicks, the solution clicks for that person in their brain. Trading has to be very similar to that. It's at the end of the day, it's just you against the charts. And so you have to find something that when you see it, that you have confidence in, that yes, that is a good setup, that makes sense to me, and in my mind, that is going to be a profitable trade, right? So I want you guys to just think about that, you know, for the rest of the night into tomorrow, over the weekend. Just think about, you know, is what you're doing with your trading, does it seem just counterintuitive to you? Like, you know, are you just doing things that because that's what people think they're, you know, have told you that you need to do? Or are you seeing something where you're like, you know what, that actually makes sense to me, and I can actually trade comfortably doing that. So when I saw Renko's, that's the feeling that I had. I was like, this just clicks for me in my brain because it's so clear, you know, it's so clean, and the market patterns, the patterns for the charts become so clear. I have students that use it for like harmonic patterns just because the patterns tend to stand out so well, and things of that nature. So Renko's can be applied in so many different ways. We're only going to scratch the surface tonight. And that's why I hope that by showing you guys this stuff, that it'll kind of open your minds to that. Okay, so here we have another example. Let's keep on moving down some examples. So here we have a nice peak formation, pushes down. We get this crossover here. It's a little bit late, but we do get it. And then we have our retracement. So again, very simple. Just, we don't do anything differently. You don't have to do anything differently each time you analyze a pair. It's either conforms to a very strict set of rules or it doesn't. And that's what makes it easy to enter into these trades, because I see, I've got my impulse leg, my A to B. Here's my B to C, this retracement. And it's getting held back here by the 36 and the 24, because you can see they're kind of intertwined there, but it is definitely getting held back. And let's take a look at the fib levels. Just 1, 2, 3. You see it? I make sure it's behind the 36, and it comes very, very close to the 50. Okay, so this one might be a judgment call, but we see it does break down, and then we start to get into a lot of chop and a lot of consolidation, and then we get a nice another impulse leg here, and we're just keep doing repetitions on a theme, because as you see over here, very, very sideways EMAs, right? Well, we want our EMAs starting to fan and point down, and as you see, they open up and fan here and start to point down, right? That's why we're not looking at these as much as we're looking at this, which is about to end that consolidation period. So we got impulse retracement, and look at that. Held back by the 36 and right on that 50, again, hitting exactly where we want it to, and then it drops. Nice little drop there. Big push up, not much you can do on that one. We have this minor formation here, then ended up topping off, but you could have possibly gotten in there. Okay. And then we start our descent down. Here, same thing. Okay, we got a little bit of a drop, then boom, there's our crossover right there. Here's our impulse leg. 1, 2. Oh, whoops, that is not trend line. There we go. So there's our impulse leg. Pulls back right there. We do not have a brick that closes all the way outside. All right? It's about 50% out, but still gets held back because here's our rejection candle right here. And that's where we would have entered, right there. And we can draw a fib, but I mean, I've been using fibs for so long, I can pretty much eyeball it. And I'm going to tell you, this is definitely going to be on at least the 50. Yep.
Hey, Ryan, we had someone asking,
Right
what do you
there.
mean by held back by the 36? And I'm explaining to her, it's your EMA. Can you show that real quick?
Absolutely. Yeah, absolutely. So yeah, when we talk about being held back by the 36, here's a real good example of it here. It's being held back by that red 36 EMA. And by held back, I mean the price comes down and tests that and cannot break through. It gets rejected here at that 36 EMA. So yeah, in our class, in our group, we call that being held back by the 36. And we also use that as, we talk about that when we talk about the Fibonacci levels as well. Like here we see it's held back by the 50, or it cannot breach the 50. So that's what we're looking for. We're looking for price to react at these levels, either these dynamic levels of support and resistance, which are our moving averages. They're dynamic because they're constantly changing, and our static or institutional levels of support and resistance, which are our horizontal levels, our Fibonacci retracement levels. So when we see that get to those levels and fail, that very first rejection candle, that's where we enter. And there's no ambiguity about it, which is what makes it so beautiful. There's no guesswork. You wouldn't be asking yourself, well, should I get in here? Is this the time? No, as soon as you see that blue brick close, when you have a setup like this, you enter into it. And then as you can see, it played out very, very nicely. Very, very nicely. Let's see here. Now, let's see here. Yes, the moving averages are the 12, the 24, and the 36. They're all exponential moving averages. The purple is our 200 exponential moving average. So we got, again, green is 12, blue is 24, and red is 36. Okay. Now, let's take a look at, now the other thing on this that I haven't shown you is this Omni remote. So down here at the bottom, this looks very similar to the one from our online chart, right? This one that created the Renko chart. This is actually the Omnia remote that I told you guys to download for free. This is it right here, Omnia remote. And what this does, it lets you cycle through the different brick frames of the chart. And the brick frames are the same as the time frames are to a regular chart. They're not identical to those charts, but as far as it's increasing the size or, shrinking the Renkos. So here, this is a 60 point, which means each of these Renkos is 12 pips high exactly. And then we can go to, basically these are higher brick frames so that we can always see what the larger trend is. We want to make sure that we're on this side of the overall trend. And also, of course, we use these for our swing trading strategies when we're looking to hold trades for, a long time, not very long, maybe a week or two, but when we're looking for those farther or, further away pip targets, take profit targets. So let's see here. We do have some questions. Let me make sure I get those addressed before we go any further. Let's see here. Yes, it says, well, exiting a trade, that's a whole nother thing. I'm going to show a couple more entries, and then we can talk about some simple ways to manage it. There's some more advanced ways, but we'll be here for a couple hours. They're all covered in the course, but I want to just keep it simple. I'll give you 1 or 2 exit strategies because I want to make sure that you guys can use this. Like I said, next week, you can go out and try Renkos for yourself. Let's see, do I have a source? Yeah, the Renkos that we're using right now, again, are from, let's see here, from ovo.com right here, or CZ, ovo.cz. That's where we're getting these from. Those are for MT4, and you can also get a free trial. All right, let's keep going. So that's what we're looking for. We're looking for places where we need that initial cross of the 12 EMA and the 36 EMA. That's going to tell us that trend is starting to emerge. A new trend is starting to emerge, whereas we were in a downtrend here. Now we're starting to emerge into an uptrend, and we just need to look for places to get into that trend. Now here, you can see there's a lot of places where price did not respect the 36. See here, and that's what we want to look for. We want to look for that price respecting that 36, not breaching it. Here's a good example. So we have a little bit of price ranging here at the bottom of a trend, and we have this here. That's gonna, I did the wrong one. Here's our cross. Yeah, and then here is the beginning of our impulse leg down here. So we're A to B. See, it reacts there to 200. We see that happen quite a lot. Then we have the retracement B to C, and let's measure it out with our fib. Now, it doesn't have to be exactly on a fib level, but if you can get both those things to match up, if you can get both the 36 EMA and a fib level to match up, then it makes a very, very strong setup for a trade. If you can get all three to line up, meaning the 36 EMA, the Fibonacci level, and the 200 EMA, then you almost always want to take that trade. Those are just what I was in a group once, they would call them Brinks trades. They're the Brinks trades, to where they're just going to back up the Brinks truck and dump the money on your front lawn. But here, so this is our entry. So we're going to enter right here as soon as that first rejection brick prints. This one, it's this white, very first white rejection brick. And then it's off to the races. This next one here, I don't know if this is a second entry. Let's take a look. It's got all of the makings here. Again, also on the 61.8. So you could stack a second entry in here. And as you can see this went for over 100 pips. Okay, so you'd have two positions going for almost over 100 pips. And then how you would manage it, you'd want to do a trailing stop, usually right along with the 36. But as you see price start to really pull away from it, if you want to exit out of the trade at that time, you can manually exit as well. So those are two ways to manage it. Usually shadowing the 36 is good, but if you get to a point where you see it's very overstretched like that, you might want to close, secure that partial out your profits, close half of your position, and then leave the rest as a runner just in case it does retrace all the way back down. So things like that will be bound to happen. Let's let's keep going. And then we start to get into some really nice movement up. And we start to get a lot of this, up and down movement. These are great places to catch entries. All of these little entries here right after this one. Here's where our cross is. Might not have gotten into very many of these because of how much they were pushing. But let's take a look at this one. We have a small impulse leg. And you can see they all kind of have that same look about them. To once you start seeing them, you just kind of get an eye for spotting just these simple pushes and retracements. Here's one, again, right on the 36 and the 61.8, which is the best EMA that you can, or the best fib level to get a rejection at. And then this one goes up, does end up turning around, but that's a perfect example of the type of entry that we would look for. And then we have price drop, and it's been dropping ever since. So those are the types of trades that, you know, you're scanning through your pairs. You have 4 pairs, maybe 6 or 8 pairs, and you're scanning through, be able to spot these types of setups. This is on a 60 brick frame. So this is very similar to like trading on the 1 hour. If you go up to some higher brick frames and you find setups like this on like the 120, this is similar to like a 4 hour or like a daily or like a weekly chart, depending on the volatility of that pair. You can find setups like these that you can swing trade for weeks, or I have some students that love dropping down to like the 30 brick frame and scalping these out as a scalping technique, which, you know, works very well for those that like that. I'm not a big scalper anymore. I used to be very into scalping when I first started trading, but when I realized that you actually get more freedom in trading by swing trading, believe it or not, honest hand to God, scalping, you end up actually being glued to the charts. And when I found out that I could just place a trade, go live my life, come back maybe the next day and check on it, that's when everything started to change for me for trading, for sure. Let's see here. Now, A to B is your impulse, B to C is your correction or retracement, then you're catching the continuation. Absolutely, that is correct. You know, like I said, just like we're trading an ABCD pattern, and you know, for those of you that don't know, it's just a very simple, it's almost exactly what we're doing. It's using Fibonacci's, and you have your A to B leg and then your B to C leg, just like we're doing. And then the last part is the C to D, which makes the ABCD, and it just looks like a lightning bolt, right? And yes, you're taking here to here off of this retracement. And so it's just that very same foundational principle of using, like that's using Fibonacci 101 and putting them in with dynamic support and resistance, you know, to really measure how much price is overstretched and how much it's pulling back. And then the Renkos that clean everything up, okay, that make things like, you know, head and shoulders patterns much, much more obvious. You know, they make double bottoms, double tops, much, much more obvious. This is on the 30. Like if we zoom out a little bit, you know, you can see things like this where, you know, it's not going to be exact, but you see these double tops. This is respecting resistance. And then you had a nice drop down to the 200. Okay, you see why we use the 200 EMA all the time. That was a nice little 120 pip drop there. You know, very, very simple. You know, look at this. I mean, who wouldn't have taken this triple top right here if they would have if you would have seen this with Renkos, right? You don't need the impulse leg on that one. You would just take this triple top, and that one dropped for even more. That one's almost a 200 pip trade. So you can see the benefit of using Renkos. It really cleans up what you're looking at, and it also allows you to focus more on your trading instead of having to worry about where exactly you're going to get in and where exactly you're going to get out. All that stuff gets automated. Okay, all that stuff gets automated. You really more have to focus on managing your trades as they move further and further into profit. Now let's see here. Let's see. Now rejection bricks have wicks. Now, yeah, most of them do. most of them will, well, actually they all will, every rejection brick, because it starts out right there in the middle, right? And actually, let me zoom in. Okay, so it opens here, halfway filled, all white, right? And then as it moves down, once it hits this level, it starts turning blue. So yes, every rejection brick will have a wick if you're using Renkos with wicks. There are versions of Renkos that don't have wicks, but that's why I prefer to use the ones with wicks, because they give you a better idea of where price is getting rejected at and how strongly it's getting rejected at. Let's see here. I'm just taking a look at some of the questions. And now, yeah, if you guys have any questions, please go ahead and dump them into the chat. And then I'm going to show you guys one other thing. It's not something you can use, but it's something that just kind of open up your eyes a little bit to what can be done with Renkos. Let's see here. Now, what time frames are the best? Well, we work with brick frames, and they're similar to time frames. The ones that I like using are the 120, as I mentioned, which are like, that's kind of like a 4-hour. And then the 60 is my bread and butter. So that means that, each one of these is 12 pips. Okay, each one of these Renko bricks is exactly 12 pips, and it mimics closely to the 1-hour time frame. That's a good question, Shay. Absolutely. From Susie, can you trade on all time frames? Is there an optimum time frame to trade? Okay, yeah, and yeah, as I was mentioning, yeah, we do trade the different ones, and like I said, I do love the 60. That's my favorite. Okay, perfect. And the EMA settings, the EMAs are these are all exponential to close, and the settings are the 36 for the red, 24 for the yellow, and 12 for the green. And then the large purple is the 200 exponential. Okay. And let's see. Now, I usually drop my weekly price action analysis videos to the question in the chat. I usually drop those on Sunday afternoons. So for those of you that are still using candlesticks, price action, I still love my price action traders. And I haven't, I've been off and on these last couple of weeks due to personal issues, but yeah, I should be back doing those every Sunday starting this weekend. So yeah, definitely keep an eye out for those. Now, let's take a look at something else really quick. Grab some water here so I don't lose my voice. But so let me show you something. This is a strategy that we use in our trading group. So I hope that you guys have kind of gotten something out of this strategy. Like I said, it's very simple. It's been around for a long time. And I'd love to just try it out, back test it, try it out. You'll see that it is very simple to implement. And that's the whole point of it, is to simplify what you're doing so you're not overthinking everything. Okay, you want to be able to, like I said, you don't want to be worried about all the extra details. You want to have every part of your trading plan written out in front of you. You want to know exactly when you're getting in, when you're getting out, and how you're going to manage it along the way. And then that way you can just focus on what is the most important thing, and that's trading, right? Actually focusing on the charts, on your trading, instead of trying to remember 100 different rules for different trading styles, right? So let's see here. Let's see, we got a couple more questions. Can you use the strategy on TradingView? You might be able to, if you can find a, you probably don't even need a mean Renko. I imagine this works with regular Renkos. And so, yeah, if you have a Renko indicator on TradingView, you can absolutely try it out on TradingView for sure. Now, some of the other strategies that I have are MT4 exclusive because they use custom indicators, and they just don't have those type of indicators available in Pine or in TradingView currently. So right now, we're basically 100% relegated to MT4 for our other strategies. Do you ever go down to like the 30 or 40 brick frames for a quick? Yes. Yeah. Like I was just mentioning, Jesse, that's a good question. We do have a lot of traders that drop down to the 30 brick frame to scalp, especially people that don't have a lot of time to trade. This strategy and also my golden level strategy on the 60 brick frame are like a scalper's delight. And so the people that want to just do quick scalping, that's exactly what they do. They either use this, or they usually actually use our level strategy, which is what I was showing you on CAD CHF. This is what we took this trade using our level strategy. And yeah, they can drop down to the 30 and just scalp this out all day long on just the pushes and the retraces.
Hey,
See.
I hate to bother you, but can you go back to that? I want everybody to see what they're looking at, guys. When I posted my screenshots and everybody was asking me how I had 300 pip days back to back with gold, it was because of what he was showing on the prior screen. And I got those from him with his system. This is Gigi talking, by the way, where you were showing your levels.
Yeah, absolutely. Let's actually take a look at gold. It's definitely a favorite. So this is gold, and this one is slightly different because we've modified this for people who like to scalp, but it's also a very solid swing trading strategy. I have a video a little further back, I think it was in July or June. I posted a 600 pip trade that we managed that over 2 weeks. I have a video documenting it over 2 weeks where we take multiple stacked in entries, and it demonstrates this video or this strategy. So what we're doing is we're just looking for those same things. We're looking for rejections and retracements, and then taking entries at those smaller levels. So it allows us to take very, very rapid trades. Here's a good example. Here we have this white level here is our strong level. This is what we're basing our trades off of, starting here. Okay. Now, what we're looking for is we're just looking for secondary levels that happen. And every time we get a secondary level, we're just going to keep stacking in until we get to our next strong level. It's very, very, very simple how we do this. So here's our first entry. That's our first rejection. Here's our second entry, second rejection. This is just from yesterday and today. And then here's our second strong level. This is what's telling us the fund's over. And so once we get that, we exit. Just like that. Like that's as simple as it can get, because those rules were already predefined before the price even started moving, that when those specific things happened, boom, we enter. And when a very specific thing happens, we exit. And so you combine both of these positions. That's, I think it was say 59 or 89, about 59, about 49. Okay, well, let's split the difference. That's about 100 pip trade, just off of our scalping template using the levels. And so that's another way that we use Renkos to trade. And this is, I would say, by far our most popular method, just because it is absolutely as simple to use as we could possibly make it. And I made it that way for a reason, so that you could focus on getting profits and not have to worry about, am I seeing this correctly? You be in groups where people are posting and like, is this right? Is this right? I don't know if I'm seeing this correctly. And we don't have that for the most part in our group. For the most part in our group, when people post, it's like, hey, this is happening. Like right now, everybody jump in, which is one of the best parts about it is we have all these guys just looking out for setups to happen. And when things go off, everybody gets notified, which is a really, really cool thing. I just really love the community that we put together. Let's see, we have any other questions before I show you guys this other method? Let's see here. Now to the video. Tell me which video. Almost every video that I have is on the YouTube channel, so you can definitely. She
was asking about the gold, so I think he said it was about 2 weeks ago, maybe.
Yeah, maybe over a month. Yeah, just check my YouTube channel. It'll be under the Renko trading playlist, and the title will say like 650 pips on gold. You should be able to find it. Yeah. Let's see here, and then. Now, if you want more training, just some more basic training, if you go to that website that Gigi had showed in the beginning, ZenFXtrading.com, I have the Renko section. I have an entire hour-long webinar that I did on Renkos that you guys are more than welcome to watch. That's free. I have tons of free videos on YouTube, and then I have a ton of free training videos on the website as well. Lots of just basic Forex stuff, just help you get your game up. So you can definitely look there for more training. And then, of course, if you want to enroll in the class, there's all the information on getting enrolled in the class, which I think we're at capacity for October, but we're starting to take enrollment for November for sure. Yeah, absolutely. You guys are absolutely welcome. Now, here's one other thing I want to show you guys. Now, this is one of our other very, very popular methods, and this is called our RTM strategy. And RTM stands for return to median. Now, this was the very first strategy that I personally developed after getting involved with Renkos. I was trading the 1, 2, 3 method, and I came across these triangulated moving average indicators. And it was actually given to me by a close friend and mentor who was trying to figure out how to use them with his own trading. And I married them up with Renkos, and the rest was history. So the principle that this works off of is if those 1, 2, 3 setups, if the EMA trades that I just showed you are trending trades, these are going to be our counter trend trades. And they're based off of one thing, and that's called divergence. Okay. For those of you that are not familiar with divergence, let this be your introduction to it, and definitely look further into it, or message me directly. I have like a free thing that I got off of a couple different websites that just explains basic divergence. You should definitely be using divergence in your trading. Again, just one of those things that you want to have in your toolbox if you don't already have it. And what divergence is it's just the basic idea that when price is making, like here, I'll show you, when price is making higher highs, and I know you guys are familiar with this because this is just basic market structure. When price is making higher highs, then you have an oscillator, and oscillators are these indicators that are down below that go between 1 and 100. Like think of your RSI, the MACD, anything that oscillates between 1 and 100 is an oscillator. And what I use is the MACD for this, because Renkos, you have to set it up in a special way. I prefer the RSI, but it does not work with Renkos. Believe me, I've tried. But on price, you're seeing higher highs, and then on the oscillator, the peaks are making lower highs. Okay, the price and the volume, okay, is diverging. Okay, that's why it's called divergence. But when you see that, it's a clear indication that something is happening behind the scenes. Price is going up, but interest is going down. It means that it's more than likely going to reverse fairly soon, and we want to take advantage of that knowledge. So what we do is when price is overstretched, which means we want to see it outside of this blue band, and it then forms divergent, either in like a double top or a double bottom outside of that band, then we just look to take it back to this middle line, which is why it's called the return to median technique, is because this middle line is it's the middle, it's the median, and price almost always returns to that, if not to the other side of the channel, but almost always returns to that median. So using that, we put together a very, very basic and straightforward strategy that we just look for those particular formations. Like here, and this is a beautiful example of how you can use it going different directions. Here we have a double bottom, right? It's piercing through the blue. And then here on the oscillator, it's divergent. So we would enter right here and take that up to the median. That's a quick 25 pips. Okay, just straightforward. So this is a strategy that we have that's meant to augment what you're already doing, right? It's going to add like extra 20, 30, sometimes 40 pips onto your total at the end of the week, because these are just little extra trades that you can take on the side, maybe when the market's not moving, but they're all very, very solid setups. We have this trade, it went up for 25, came to the other side, and then made what we call a rising M. So it's a little bit better than a double top. That second peak goes a little higher, forms that M formation. So we have a rising M, and then the peaks down below, we see we have lower highs. That's showing us our divergence. So it's this blue brick prints. We're in the trade, and the take profit is the median. There's no guesswork about that. And that's 46, we'll just say 45. There's 45 pips right there. That's a great little addition to whatever other trades you're doing, or that can just augment, that can just be your trading. Like you take 2 or 3 of those a week, 100 pips a week, and then 400 pips a month. I mean, that's more than enough to grow any type of an account. But those little trades, they add up. Here's another one. We're getting towards the end of a trend here, but we just want to catch that pullback. And so here we have price making higher highs. We have the oscillator making higher lows, or sorry, lower highs. You know what I meant? And then we get a drop down, nice little 25 pip take profit. So these are our little scalp trades. Now you can go up a brick frame to the 120 and take these as swing trades and look for even further take profit levels. So instead of taking 25 to 35 pip trades, and you're taking like 50 to 75 pip trades, you're just taking longer for these to play out. But the strategy is still exactly the same. Now let's take a look at, we have a couple more questions. Let's see here. They are very similar to Bollinger Bands, but they don't work off of volatility. They're more based off of moving averages. That's why they're so smooth. Whereas if we threw Bollinger Bands on there, you'd see they're just so volatile. They're very constricted, then very expanded, and very dynamic in that fashion. But these are just very solid, smooth channels, and that's because they're more based off of moving averages. Great question, though. Good question. Let's see here. Yes, the oscillators that I have, the first one is the MACD, and it's been augmented to where there's no delay between the histogram and the price line. That's because I use it just to see the divergence. And then this bottom one is a custom indicator that we have in the course. It's called the MBFX timer, and we use that also for timing our entries and our exits. It's part of the special sauce, so I won't go into all of that, but we do use that as part of our entry method. Let's see here. Other questions. It's too much sauce. Too much sauce. I remember being somewhere where it was always about too much sauce. That brings back some memories. Let's see here. Do the dotted lines repaint? Yes, they do. Absolutely. Of course they do. Of course they. Every indicator repaints. Now, and I say that without any hesitation because as traders, and if you're newer to trading, I can understand if you don't know, but if you've been in the game for a while, then you know what it is, but you also know the reasoning why, is that all indicators, except for maybe a couple, they repaint. But that's because it has to adapt to whatever new price data is coming in. Now, if those levels never repainted, whew, man, we would be millionaires. We would all be millionaires. But what we're doing is we're playing the probabilities of the levels of support and resistance just to have an edge that's on our side. We're not looking for anything that's a guaranteed win. That would be great, but it just doesn't exist. But all indicators either have to repaint or they end up becoming an invalid signal. So let me show you the difference. So let's say that I have an arrow indicator. We all love those, right? I love them. It has an arrow indicator and it says sell here, right? But then price does this. Okay, if this is an indicator that does not repaint, like it's in its coding, that once it prints, that it cannot take in new data information and it cannot repaint, then what's going to happen is, you're just going to get just a bunch of them. Just going to get a bunch of them littered all the way up until it's finally correct. The reason why is because as it receives new price data, the old data becomes kind of either invalid or not correct. It has to adjust to what's now happening in the market, or else this is not going to be valid and it's going to be replaced by a new indication. All other indicators repaint because when they see that data come in, and I mean even like these channels here, even these channels will repaint if price makes a sudden push up or down. And that's just to be expected, because as new data comes in, it's trying to give you the best indication up to that minute. The indicator doesn't know that you took a position like an hour ago, and it's like, well, you know, my bad. I hate to tell you, but you know, I have to move. But no, it's just taking the data that it receives and going along with it. So let's take the levels, for example. Here's a combination level RTM trade on Australian dollar yen here. So let's say we have these levels here, and we take a position on those levels. We would put our stop loss above here, because we don't want to be in the trade if it goes above that and invalidates those levels or causes them to repaint. And by doing that, it allows us to take very, very tight stops and then look for very large take profit targets. So we know that if it goes any farther than this, we're out of the trade. It's not the setup that we wanted, and we want to look for a different trade. That's as opposed to where some people just have no idea where to put a stop loss at, and they'll keep moving it back because they just don't know if they're wrong. You know, you've been in trades before where you want to be right, but you just don't know if you're right. You don't know if you're wrong. You don't have any set of rules that's telling you whether you are right or wrong. And so, yes, these will disappear and repaint if the setup is no longer valid. But at the same time, you know, we want to be out of that trade at that time, you know, maybe even sooner than that as well. So, yeah, and I would never like tell you guys, oh, he's never. I've actually seen systems that claim these don't repaint. And I'll be the first one to tell you they absolutely do, but it's to your benefit because it tells you immediately whether we need to be out of a trade and to be on to the next one. So good question, though. It was a very good question, Big Paul. Let's see here. Let's see here. Do any other ones? And then what's the name of the band? I don't hear any music playing, so I don't know which band. If it's any of my YouTube videos, that's free, royalty-free music. That's exactly what that is. So, all right, so let's go back and take a look at that one more time. So that's all we're looking for. So we're just looking for those divergent movements to be able to take positions. So between the levels that we have between our EMAs that I hope that you guys try out later next week, whenever you get a chance to try them out. And then between, you know, our golden scalping levels and all that, we have a variety of different ways that we can add Renkos to our trading. And then one of the best parts is that I get students all the time that come to me with hybrid strategies that they've developed on their own because they want me to see what makes the most sense to them. And I love it because I love it when students come to me, they say, hey, you know, I don't know, I don't want you to be upset, but I started using Renkos with my harmonic training or trading, and I can see these patterns like all the time now because it's so much simpler to see price movement. And I'm like, that's great. I mean, that's the whole point. The whole point is to take Renkos, use them as a basis, a foundation for your trading, just to make it simpler, and then do what makes to you. Like, you don't have to do our strategies. You don't have to do the levels. You don't have to do EMAs. You know, maybe you're a market maker method person that wants to see if Renkos fit into that. That's what I'm about. I'm just all about giving people the tools that will help them become the traders that they eventually should be. That each one of you is a successful trader inside. Each one of you has the desire to be successful in trading, and that is a very realistic possibility, and it's a very realistic goal. It's very achievable. You know, you have to find out who you are as a trader, though. You know, like what is your style? Okay, if I were to ask you right now, what's your trading style? And you just like, I don't know, I trade, or, you know, market structure, or price action, or Renkos, I guess. You know, it just means that you're still in that phase of you're trying to emulate people that are successful, and hoping that will make you successful. But what's going to make you successful is finding out who you are as a trader, and just tunnel focusing on those things that make sense to you. Hopefully Renko's are something that you could add into that. And I hope that you were able to get something from this demonstration tonight. But, you know, if anything, at least you got a couple strategies out of it, maybe learned a little bit about divergence and a new way of looking at the charts. But if anybody has any questions, I would love to field them at this time. And I really appreciate your guys' attention. You guys have been awesome.
Hey, Ryan, we had a couple people jumped on at the beginning before we ever got started that said they're students of yours. If they want to unmute and talk about their experience, that's good. I can tell you guys, everybody knows I love market structure. I love marking up charts, and I love Renkos. So I use this to support what I'm already seeing in the market. If I have a question about where my chart is going or where those support and resistance levels are, this tool, this strategy, this system has definitely really helped me out, especially with my swing trades, because you guys know I love 100, 200, 300 pip moves. And if you look at Ryan's video from last week, he caught about 500 pips on EJ, and he had a 1250 pip week. I think he showed one loss. So, you know, as traders, we all lose. I was telling someone that at the beginning. But it's a great system. I can tell you myself that I really like it, and I'm planning on utilizing it more. And this was a way for me to get more familiar with it myself. So if anybody else that's using the system wants to say anything.
Yeah, if anybody's here, definitely unmute and jump on. I'd love to hear. I think I saw a couple of the students in here as well. While we're waiting, we've got a couple questions I can answer in the interim. Can we show the fib from the first strategy again? Yeah, I'll just show you how to draw that out. And then do we trail after every 12 pips? What you want to do is kind of trail using the 36 EMA, just a little bit above. If it comes back and tests it and gets rejected, you can have another entry. If it comes back and breaks through, then it'll close out your trade. And what you want to do for your Fibonacci's is to measure them out. Okay, you click on the Fibonacci tool up here in your toolbar. Should be there just by default. And you want to start at the swing high, go wick to wick. Now you see how I'm not starting up here because we had a little bit of a pullback. So we had a push, a little bit of a pullback, start up here, and then drag it down to the bottom to swing low. See how we go wick to wick. And then this retracement here, as you can see, it actually went through the 61.8. This would not be a good setup because of how ranging, and we're above the 200. We also went beyond the 36 EMA. So not a setup that we would take, but that's how you want to draw them out. You just grab that fib, go wick to wick. And of course, if you're looking to do a buy trade, you're going to go in the opposite direction. Like if we're looking to buy, we're going to go swing low to swing high. There you go. Comes down here, hits the 50, and you would take it up. So very, very simple, very clean. Let's see, anything else? Yes, the question from Mickey is, are my entry and exit rules written anywhere? Yes, they're posted in the very top of our private student Discord. We have a Discord channel. By the way, let me drop that in the link for you guys. Also drop a link for all the free YouTube videos if you guys want to check those out. And then the course, if you guys want to check out the course, of course. But yeah, we have that Discord server. Everybody come join in. That's free. We have a ton of free rooms, but we have some private rooms. And in those private rooms and in the course, we do write out exactly all of our entries, exits, rules for management. That's like we do that before we even jump into the charts. That's absolutely a requirement. So yeah, we do have this written down. I'm sure you're probably asking to know if you could have a copy, but sorry, long story short, we do have them, but it's just for students. Let's see here. Training series on MT4. I believe that's the one I just posted. Yeah, actually, if you go to the website here, the one that I posted that says free training video series, the MT4 series, as well as the Trading View series, they're both on that web page, so they'll be able to lead you there. Good, good. That's good to good to hear, Susie. I'm glad that kind of opened your eyes on this one. That definitely makes it all worth it. Yeah, definitely backtest all this over this weekend, and you'll see that these things happen a lot, and they're very profitable and very easy to take advantage of. What's the EMA used in the second strategy? We're not using an EMA in that strategy. These are what are known as triangular moving averages, which mean they cover both the high and the low, forming that channel. And this is actually two channels using the average true range indicator to form these channels. They were custom built. So unfortunately, you won't be able to find them anywhere. Like I say, they were custom built for a trader, a hedge fund trader out in New York, I believe it was. If I'm trying to remember what my mentor told me when he passed them on to me, but anyways, they were developed for some type of options trading, and then my mentor got a hold of them and he passed a copy down to me. And when I started using them in Renkos, I was like, man, these are just too good to be true, because they work out so perfectly with Renkos, just Renkos and a little bit of divergence, and we're catching trades like very, very regularly. Okay, good. Yep, and then there's the Discord server. Okay, good. How long is the course in the term of days? Good question, Melissa. It's self-paced. Now, like the entire first month is a lot of one-on-one mentorship, as far as, directly communicating back and forth through the Discord messenger. You have homework assignments, you have markups that you have to do before you're even allowed into the channel, because I want to make sure that you not only are learning it, but you're learning it to a point where you're going to be like really lethal in the charts with them. I want to make sure you learn them extremely well. So, but other than that, it's self-paced. It's all mostly done online as far as the tutorials. Then we have the live rooms, we have the live webinars. I've seen some people just burn through all the materials in like a couple days, like just binge watch them, which I don't recommend, because then you have to go back and actually rewatch them to catch all the fine points. But, and then I think on average, most people complete it in about 2 to 3 weeks, that just do it at night after work or things like that, or have to do it in their spare time. So yeah, just depends on how much free time you have. The Discord link, if you scroll up just a little bit, LG, should be, it's just a couple above you for the Discord invite. Let me see if I can drop it again. All right, any other questions from anybody? So we really, ever since I've been using Renkos, it's really just been a game changer for me. And ever since, I've just been trying to preach the gospel of Renkos to anybody that'll hear. They seem to kind of be in the back for most traders. It's kind of like an obscure thing, and an oddity that maybe, I don't know, options or commodities traders use, that is just not something that is, usable in Forex, but it's actually quite the contrary. These are extremely applicable to Forex. I think they actually should be used instead of candlesticks for Forex, because of how easy they are to trade off of. But unfortunately, we all start out learning with candlesticks, and so we kind of have to unlearn that. Let's see. Do you have a basic introduction to Renko Bar's course? I do. Yeah. If you go to the website, to that course, the course page, I have a 1-hour free webinar that goes over everything, all Renko's 101. It covers everything, soup to nuts. Let's see.
Yeah, I think, Ryan, maybe when you drop the link, it probably replied to him privately. It'll default that on Zoom for some reason.
Oh yeah, you are right. Let's see here. Oh yeah, I think I sent it to Big Paul by mistake, by private. And let me give that to everybody. There you go, guys. And then yes, we have to use MT4 because the indicators are custom indicators that only work in MT4. We don't have the code to be able to use them in trading view. Maybe someday, hopefully, The only other issue is that we'd have to have a Renko provider for TradingView that was as, you know, that was as economical as the OVO Renkos, because, you know, $45 lifetime key, that's a done deal, but, you know, we don't want people to have to subscribe to a Renko data provider on a monthly basis just to be able to use the strategy. Right.
Hey,
All right.
Robert.
Anybody?
Yeah, Robert made a mistake and replied to me privately, but he said his course is worth it, y'all. I'm a new student. He is super helpful. Website is well organized.
All right. Thank you, Robert. Love to hear. That's what I love to hear. Is I like to hear people they love the course, that they're getting a lot out of it, but most of all, that they're being profitable. One of the great things we have on our Discord channel that is something you guys could use starting tonight is we have a room called the Professional Room, and I built that out for all members to use. It's free for everyone, and it's got 4 little sub threads in it. And it basically, it's for you to pledge that you're going to dedicate, you know, a certain amount of time to achieving a certain amount, a goal of either pips or equity each week. And you declare that out publicly. And then there's a room for you to post a trading journal every month, every week. So you have to keep a trading journal. Like, it keeps you accountable, but it also, you see other people and how they're doing, posting their trades. Then there's a before and after room to where you get to show your biggest winner and your biggest loser from the week. And then it also has a professional development place where you can set goals personal to your trading each week. Like, maybe you want to work on being patient, or maybe you want to work on sticking to your entry rules, things like that. So yeah, I highly recommend you guys take advantage of that. That's free for anybody that wants to use that. And I think it really helps keep you accountable as a trader. Because, you know, when we get behind the desk and we're by ourselves, a lot of times we let the rules slip. And this is one of the ways to, like, keep you consistent. And if you're not keeping a trading journal, start that tonight. I have a Excel spreadsheet you can use. I don't know if you guys are using one in your group, but that's the biggest piece of advice I can give anybody tonight is keep an honest journal. Take a before and after screenshot of every trade, and then mark down the trade, the direction, and then the, you know, did you win or lose, and a strategy of yours that you were using. And your trading will improve just by default. It will have to improve because you'll be forced to look at the mistakes that you're making that you weren't shining a light on earlier. You were just kind of like, oh, I just won't think about how I do that. Let's see here. Good. Okay, good. Yeah, we got good stuff there. And can you share the screen to the Discord group? Let me see if I have that up. Let's see here.
I know a lot of us are new to Discord. I know your group was the first Discord group that I ever joined. So some of the people might not be familiar with Discord yet.
Oh, no worries.
Hey,
So
I see we got a lot of new people. Yay.
Yay. Oh, that's good. Good. Yeah. So this is our Discord. It's just, so it was built out for gaming. Originally, it was built out for gamers, but it's so versatile that it works even better than anything that you can do on Telegram. You know, Telegram, people are moving away from that because it's so limiting. You know, it's better than Slack. I just think it's a really great platform. And so what it is, when you join, you'll see all these rooms listed to the left. Now up at the top, you can mute any single room. You can also look at all the pinned messages. Like, here's all the pinned messages of videos that we posted in the past. You can see everybody that's here. Members, they're also subdivided by the different roles that they have as far as different rooms that they have access to. And you can search for people, but mainly it's just broken down to where you can pick and choose what it is, the content that you want to receive. Like, we have our general discussion where we see most announcements getting posted. Here's where you can ask a question. We've got a lot of great questions, as well as a lot of my students jumping in, answering a lot of new people's questions, which I love to see. We got a bunch of great people. Share my strategy section. We get a lot of people coming in here, posting other things that they're doing. We've got a lot of levels trades and stuff like that. Here's a place for you to introduce yourself, and we see you can find people that are trading in your area or that trade your same time zone or instrument. And then we have the price action course here for price action students. We have the Renko course here for Renko students. This is the live trade room, and this is where I get in every morning, New York session, 8 a.m. to noon, and I post all the setups that I'm seeing to the students in real time. And then also, if I'm entering into any trades, I post those in real time. We talk about any news events that are happening. We trade. This is where I'm actually trading every day, and I treat it just like a normal trading day, only I'm talking with all the students to let them know what I'm seeing. So we all get in there, we trade together. Of course, there's a discussion room where they can ask questions of any of the setups that we send out, and then they can also send out their own setups, which these are all from students, and they're just posting some really, really great stuff. Here's the professional room. The first room is just the rules. It just shows you what the different rules for the different rooms are. There are a couple. Just try and keep it organized. Here's my goal is section, and you're basically just saying who you are and what your goal is, whether it be 50 pips a week, 5% equity gain a week, whatever. And then here's the trade logs that everybody's posting. And if you go to the pinned section, this is a journal that you can, right here, that you can download, and it's blank, and you can start keeping your own trade journal tonight. So that I would highly recommend you guys do that if you're not already doing that. Here's the before and after screenshots. And like I said, the rule is you have to show one winner and one loser. And I make people do that. This is his loss. Because I want people to remember that you will lose in Forex. I mean, that's guaranteed. That's the only guarantee that you have in Forex, is you will lose, but you have to be able to manage losses. And managing losses is where profitability comes in. And you keep them small, and you don't let them affect how you trade, and then you're just on to the next trade. Here's personal goals, where we have people posting what they want to do with their actual trading, as far as, making sure that they're trading a little bit better every day. You want to make sure that every day you're trading just a little bit better than you were the day before. Then we might have a signals channel come back out. This is a little bit too high maintenance for me to upkeep. I try and send signals out when I can, but since it's just me, I have a hard time keeping them up. So that's been on pause for a while. And then here we have an EA discussion where we talk about the Mr. Robot Expert Advisor that people are using very profitably. But yeah, that's it. So basically everything's on the left. You can find people with the people tab. And then you also have the option of direct messaging people, so you just click on their name and you can direct message them just like you can with any messaging app. And also when you get into the very first page, if you go to the pinned messages, if you scroll down right there, this new Discord introduction video, it's an entire hour-long webinar where I go over everything about Discord if you really want to know all the ins and outs of how to use it. So there's also that too. All right. Let's see, any other questions? Let's see. Oh, Gigi, I think someone's asking for your Discord channel as well. And then, good, yes. And then, yeah, and then there's Derek posting as well about the course. He's been doing very, very well. And yeah, I can't say enough good stuff about the group either. That's one of my favorite. I just love interacting with students. I love talking about trading. I love seeing them progress as traders. I love seeing them grow as traders. That's one of my favorite things to do. Is just, I made it good. It's been 5 years now that I've been doing this full time, living the dream, so to speak. And it just, it does. It's my favorite thing in the world to take this knowledge that I have and pass it on to other people and help them get to where I'm at, because that's what everyone should be, is everyone eventually should be able to reach that goal of becoming a full-time trader. You know, just all it is patience, staying in the charts, and just keep grinding until you make that breakthrough. That's all it is. If you give up, you'll probably be stopping just short of that breakthrough. So don't give up. Let's see here. Anything else? Okay. Yeah, I don't see any other questions. If that's it, we could probably wrap it up. What do you think, Gigi?
All right, anybody got any questions? I know we want to say thank you to Ryan for taking time out on a Friday night to come give us some free knowledge. Y'all know that's what this is always about. I love to get people in here that can teach you something different. I'll give you a new, like I said, give you an aha moment, give you a different view of the market, because you never know who's going to bring that one thing that's going to click for you or resonate for you as a trader. Everybody sees the market differently. So I like to get people on here that can just, give you something new to look at that just might help you become that profitable trader you need to become. And I know I love Renkos and I love Fibs, and when you put them together, it's a very powerful combination.
Thank you so much, Ryan. I learned a lot tonight, and I'm sure a lot of our participants did as well. Team, if you have any questions, now's the time to ask.
You guys are very welcome. Absolutely. It's been my pleasure to be here with you guys.
Yeah, we had like 120 people got on. I know they all start dropping off always a little bit under after 11 o'clock. It's getting late, but that's why we call it Forex'n'Chill. I know my plans after I get off here. Susie said she's going to jump in there and start checking out the Renkos. I'm going to cheat and ride over to McDonald's and get a soft serve cone.
That sounds good.
It's the chill part. After Friday night Forex'n'Chill, I always just lay back, relax, and enjoy the weekend. On Saturday, I'm like anti-Forex, but Grant, he's always an awesome host, and he will get the video up. I'm just going to share my screen so I can show everybody where they can find the recording tomorrow. And let's see.
Yeah, let me get in mine.
All right, again, here is his YouTube channel. You can subscribe. Over here is my YouTube channel, and you'll see him there tomorrow, or at least by Sunday. Grant will get it up. These are my past videos. So his video will be up, and we will also put his links. Whenever I let somebody come on and teach, we like to share their links. So we'll give you the link to like his course. He's got his free course trial, and he's got the free intro to Renkos. He's got his YouTube where he drops weekly outlooks, and then he's also got his Discord that you'll have the link to. So anybody else got anything before we leave? I see a lot of people saying thank you. If that's it, all like they say back home, if all hearts and minds are clear, we're past the collection plate and go home.
There we go. You guys are very welcome. Thank you for having me tonight. And yeah, if you guys have any questions about anything, even if you're not one of my students, feel free to email me or message me. I just love to talk to people about trading. I'd be happy to help you with anything you're struggling with.
All right, see us out the door, Grant.
Thank you so much, everybody. Thanks, Gigi. Thanks, Ryan.
You are welcome, for sure.
All right, everybody. I want to thank everyone who stayed on the whole time and everyone who came on tonight. It was really wonderful, Ryan. I want to thank you again for taking time out of your busy day to share all this wonderful knowledge. I'm sure people were taking notes and got a lot of nuggets out of tonight's session. Gigi, thank you so much again for providing this platform for everyone. And team, we're going to have this posted up tomorrow, the next day, and you can watch it as many times as you like. Be sure to visit the links. I'll be posting them in just a moment, okay? Have a wonderful evening.
Thank you, Grant. Thank you so much.
Thanks, guys. Thank you so much.
Thank you.
Thank you. Good night.
Thank you.
Okay.